War. It's packaged as patriotism, painted in red, white, and blue. We're told it's about freedom, about justice, about good versus evil. But beneath the flags and parades lies a darker engine. One that turns blood into money, bullets into bonuses, sacrifice into stock options. Because in America, war isn't just a battlefield, it's a business model. Every bomb dropped, every tank built, every troop deployed, it all feeds a system. One fueled not by morality, but by profit margins. While families send their sons and daughters to fight, a different kind of war is waged in boardrooms, where defense contractors negotiate billion-dollar deals, where banks arrange loans that turn destruction into dividends. This isn't a theory, it's a pattern, a machine, one that's been running for over a century, from the trenches of World War I to the deserts of the Middle East. And if you look closely, you'll see it everywhere. In your taxes, in your debt, in the rising cost of living. Because this system doesn't just affect soldiers, it affects all of us. So today, we're pulling back the curtain to expose how war became woven into the DNA of American finance, how Wall Street, Washington, and weapons manufacturers built an empire of endless conflict, and how that empire thrives whether wars are won or lost. This is not just history, it's financial reality. Because if you're not benefiting from the business of war, then you're probably paying for it. And the first receipt was printed over 100 years ago, in 1914. Before the US ever fired a shot in World War I, it was already winning financially. From 1914 to 1917, as Europe tore itself apart, American banks and businesses were busy striking deals. Wall Street didn't see trenches, it saw opportunity. J.P. Morgan and Company became the official purchasing agent for Britain and France, securing over $3 billion in credit and weapons, a staggering sum for the time. This wasn't charity, it was business. Every bullet fired by Allied forces came with a receipt and an interest rate. American factories boomed. Wheat, steel, munitions, profits soared as the U.S. became the arsenal of democracies it hadn't even joined yet. But there was a catch. If the Allies lost, those debts wouldn't be repaid. So when the U.S. finally entered the war in 1917, it wasn't just about freedom. It was about financial survival. The line between patriotism and profit blurred. The U.S. Treasury launched Liberty bonds, and propaganda campaigns flooded the country. Uncle Sam didn't just want you to fight, he wanted your savings. Over 20 million Americans bought bonds, often out of guilt or duty. But while citizens lent dollars, bankers printed profits. War had become a product, sold, funded, monetized. And when the war ended, America wasn't just a victor, it was a creditor empire. If World War I was the prototype, World War II was the full-scale rollout of financialized warfare. By the time Japan bombed Pearl Harbor in 1941, America's economy was already revving up. President Roosevelt promised the nation would become the arsenal of democracy, and that's exactly what it did. Factories flipped overnight from building cars to building tanks, aircraft, and ammunition. Industrial giants like General Motors, Ford, and Boeing saw record-breaking profits guaranteed by wartime contracts. But again, the real engine wasn't just steel and labor, it was finance. The U.S. government issued war bonds, and over 85 million Americans bought them. Posters lined every street, "Buy bonds, beat the Axis." But behind the patriotism was the same mechanism: public debt funded by private capital. The Federal Reserve kept interest rates low to support the war effort. Treasury bonds became the foundation of the entire financial system. Wall Street didn't just survive the war, it thrived. And this time, victory came with a crown. In 1944, at Bretton Woods, the US dollar was officially declared the global reserve currency, backed by gold at $35 an ounce. While Europe lay in ruins, America emerged as the undisputed financial superpower, not just because of the battles it fought, but because of the money it made. War was no longer just a cost, it was an investment. And for those who understood the game, it paid dividends. After World War II was over, you might think the war machine would slow down. It didn't. Instead, the Cold War gave America a new justification, a permanent one, for defense spending. The enemy wasn't a single nation anymore, it was an ideology, communism, and that made it infinite. Military spending skyrocketed, defense contractors flourished, entire industries, aerospace, computing, electronics, oil, were propped up by government budgets. Economists even had a name for it. Military Keynesianism, the idea that government spending on war would keep the economy stable and growing. And it worked, if you were in the right circles. Communities near military bases or weapons factories thrived. Politicians secured re-election by promising defense jobs. Wall Street financed the machinery with treasury bonds and defense stocks. But the average American, they paid with inflation, with higher taxes, with growing national debt. Meanwhile, corporations like Lockheed Martin and Raytheon became fixtures in American life, not for peacetime innovation, but for their ability to deliver weapons, reliably, profitably, and without pause. The Cold War wasn't just a geopolitical standoff, it was a perpetual business model. And while missiles pointed across oceans, the real action happened in boardrooms and balance sheets. By the time the US entered the Vietnam War, the business model of conflict was fully operational. It wasn't just about fighting communism. It was about financing war through debt. The war cost over $100 billion, an astronomical figure at the time. But rather than raise taxes directly, the government turned to deficit spending.
The Federal Reserve kept interest rates low. Treasury bonds were sold. And once again, ordinary Americans were told it was their patriotic duty to lend their savings. But while citizens bought bonds, the real beneficiaries were defense contractors. Helicopters, jets, napalm, ammunition, all manufactured at scale by private companies with guaranteed government contracts. Profits were locked in, risk was minimal, accountability scarce. And as the war dragged on, the cracks in the system started to show. Inflation soared, public trust eroded, the dollar, still technically backed by gold, couldn't hold the weight. Then came 1971, a financial turning point. President Nixon ended the dollar's convertibility to gold, cutting the last tether between money and tangible value. From that moment on, the dollar was backed only by faith, and crucially, by military and financial dominance. The Vietnam War didn't just reshape geopolitics, it reshaped money itself. After abandoning gold, the US needed a new way to maintain the dollar's global dominance. It found that power in oil. In the early 1970s, amid inflation and an energy crisis, the US struck a quiet deal with Saudi Arabia. The terms were simple: sell your oil exclusively in US dollars. And in return, military protection, weapons, global influence. Saudi Arabia agreed. Soon every member of OPEC followed. This was the birth of the petrodollar system, a hidden economic alliance that ensured global demand for US dollars, so long as the world ran on oil. Here's how the system worked. Countries needed dollars to buy oil. They exported goods to the US to earn those dollars. Oil-rich nations, now flush with cash, reinvested in US assets, bonds, real estate, infrastructure. The result, a self-reinforcing loop of American dominance. The US could print dollars, fund massive military operations, run up huge deficits, and the world would still need more. It was brilliant. It was invisible. And it was built on the backs of oil and military force. But this system had a dark edge. Any country that threatened it, any leader who tried to sell oil outside the dollar, became a target. Iraq's Saddam Hussein, Libya's Muammar Gaddafi, Each tried to challenge the petrodollar. Each faced devastating consequences. Oil wasn't just fuel anymore. It became the foundation of empire. As the 21st century began, the dollar's power evolved once again. Now, it wasn't just physical dominance. It was digital. In 1973, a new system was born, SWIFT, the Society for Worldwide Interbank Financial Telecommunication. It became the nervous system of global finance. Over 11,000 banks in 200-plus countries connected through it. Every major trade, oil purchase, reserve transaction flowed through SWIFT. And while it claimed to be neutral, one nation quietly held the master key: the United States. With the push of a button, the U.S. could cut countries off, freezing them out of global finance. And it did. In 2012, Iran was disconnected from SWIFT. Inflation exploded. Vital goods disappeared. The economy shrank by over 6%. In 2022, Russia was partially ejected. $300+ billion in reserves frozen. Not stolen, legal, because it all ran through a U.S.-controlled system. This wasn't war by bombs. It was war by bank wire. A financial kill switch with devastating precision. No invasions, no missiles, just sanctions. And these sanctions weren't just punishments. They were power plays. Control compliance or lose access. That was the message. The dollar wasn't just currency anymore. It was a weapon, invisible, digital, and absolute. For decades, the dollar sat unchallenged, ruling oil, trade, debt, and digital networks. But cracks began to form. Enter BRICS, a rising coalition. Brazil, Russia, India, China, and South Africa. Together, they represented over 40% of the global population and the growing frustration with U.S. financial dominance. These nations had watched America use the dollar like a sword and decided to build their own shields. Russia, stung by sanctions, created its own payment system. China launched CIPS, an alternative to SWIFT. India began trading with Iran, using rupees, not dollars. Brazil struck a deal with China to settle trade and yuan. At first, these were just quiet moves. But by 2024, the earth shifted. Saudi Arabia, the heart of the petrodollar pact, let the agreement quietly expire. For decades, they sold oil only in dollars. But now, oil was being sold in euros, rupees, yuan, even gold. The unthinkable had become reality. The dollar was no longer the only game in town, and beyond BRICS, others followed. Malaysia, Indonesia, Nigeria, exploring trade in local currencies. France paid for liquefied gas from China in yuan. All signs pointed to one thing: de-dollarization was real. And at the same time, new alternatives emerged: CBDCs, central bank digital currencies, gold-backed assets, cryptocurrencies. The monopoly was breaking, not all at once, but fracture by fracture. The world was unraveling from the dollar's grip, and a multipolar financial system was rising in its place. But with every rebellion comes a reaction. What happens when the dollar is no longer king? This isn't just about currency. It's about power, stability, and the very structure of the global economy. If global demand for dollars collapses, the ripple effects would be massive. Foreign nations dump U.S. debt, flooding markets. Interest rates skyrocket, making borrowing unaffordable. Inflation surges beyond the Fed's control. Government spending shrinks or collapses entirely.
pensions could evaporate, mortgages default, markets implode. This wouldn't be a recession, it would be a financial reckoning. Because America's power isn't just built on productivity, it's built on confidence. Lose that, and the system unravels. But perhaps even more dangerous than collapse is how the U.S. might respond to prevent it. If history is any guide, empires don't surrender power, they tighten their grip. So what does that look like? More sanctions? More surveillance? More inflation exported abroad? More wars, economic and otherwise? Because when control starts slipping, the instinct is to double down, to weaponize even harder. And in doing so, the dollar becomes even more than a financial tool. It becomes a tool of desperation, the final act of a fading empire. Most people will never see this coming. They'll scroll past headlines, trust the system, believe the lie that money is just money. But now you know better. You've seen the patterns, the way war, profit, and currency intertwine. You've seen how money isn't just printed, it's engineered. Engineered to benefit a few, while the many carry the cost.
Every war fought, every crisis exploited, every dollar spent without a thought of consequence, it all feeds the same machine. But if you understand it, you're no longer a pawn in it. You begin to question, why do interest rates crush middle-class families? Why do endless wars always seem to benefit the same corporations? Why does inflation rise even when the economy grows? It's not random, it's design. Understanding history isn't just about knowing the past, it's about predicting the future. And if the future brings a collapse, a transition, or a fight over a new global currency, you'll be prepared. Because real financial education isn't about budgeting spreadsheets or savings apps. It's about systems, incentives, power. And that power is shifting. This isn't conspiracy, it's history. A history written not in textbooks, but in contracts, bombs, and balance sheets. From World War I to Afghanistan, from Liberty bonds to petrodollars, America didn't just fight wars, it financialized them. It built an empire not just with armies, but with accounts receivable. And now, as the world moves toward a new era, with BRICS rising, digital currencies emerging, and trust in fiat money fading, the next battle won't be fought with bullets. It'll be fought with code, debt, data, and dominance. This is the war most people will never see, but it's the one that defines everything. Because if money is power and war is profit, then whoever controls the system controls the future. So the question is, will you just watch it happen, or will you understand it before it's too late? If this gave you a new way to see the world, hit subscribe. Comment what you think comes next and how this system could unravel. And share this with someone who still thinks war is just about freedom. Because true wealth starts with knowledge, and real power comes from seeing behind the curtain. This is Wealth Historian, where we expose the economics of empire, one truth at a time.